Imagine waking up one day, checking your portfolio, and seeing it's down 20% overnight. Your heart sinks, your mind races. What do? Sell everything? Double down? Or sit frozen watching it drop even further? Let me tell you something. Investing without a risk management strategy is like walking a tightrope without a safety net. But don't worry. By the end of this video, you'll know exactly how to protect your money even when the market's in free fall. The importance of risk management isn't just for hedge funds or Wall Street pros. It's for anyone who wants to grow their wealth without sleepless nights. Here's a reality check. In 2022, over 85% of retail investors underperformed the market. Why? Most lacked a solid plan for managing risks when things went south. You might think, I'll figure it out when it happens. But that's like deciding how to put out a fire after your house is already in flames. So let's break it down. Diversification, the golden rule. Don't put all your eggs in one basket. We've heard it before, but do we practice it? Diversification is your first line of defense. In 2022, when tech stocks like Meta and Tesla lost over 60% of their value, energy stocks, think ExxonMobil and Chevron, skyrocketed, with gains exceeding 50%. Investors who spread their money across different sectors softened the blow of the tech meltdown and even came out ahead. So what does diversification look like? It's not just about picking a few different stocks. It means balancing your portfolio with a mix of stocks, bonds, ETFs, and even international assets. If one sector tanks, others can keep you afloat. Position sizing. Don't bet the farm. Here's a simple question. Would you gamble your entire life savings on a single roll of dice? No? Then why risk it all on one stock or asset? Position sizing ensures no single investment has the power to wreck your portfolio. For example, when Silicon Valley Bank collapsed in early 2023, investors who had heavy exposure to banking stocks saw significant losses. But those who followed the rule of limiting individual positions to 5% or less of their portfolio, they shrugged it off and moved on. Position sizing isn't just smart, it's essential. Stop-loss orders, your safety net. Let's talk about stop-loss orders, the unsung heroes of risk management. A stop-loss automatically sells your stock if it falls below a certain price. Think of it as a seatbelt. It doesn't prevent accidents, but can save your life during one. During the crypto crash in late 2022, Bitcoin dropped below $16,000. Investors who had stop-loss orders in place limited their losses, while others watched their portfolios nosedive. Setting stop-losses isn't a sign of weakness, it's a sign of wisdom. Hedging, the insurance policy for your portfolio. Imagine you could buy insurance against market crashes. Well, you can. It's called hedging. Options, inverse ETFs, and even gold can act as a shield during volatile times. Take the U.S. debt ceiling crisis in mid-2023. Savvy investors used option strategies and inverse ETFs to offset losses when markets wobbled. Hedging doesn't eliminate risk, but it makes the punches hurt a lot less. Cash reserves. The forgotten hero. Cash is often overlooked in risk management, but it's your secret weapon during market downturns. When the banking sector faced turmoil in 2023, investors with cash reserves didn't just sit on the sidelines. They swooped in and bought quality stocks at discounted prices. Holding cash isn't about missing out on gains. It's about being ready for opportunities. Remember, in investing, patience often pays off. Mindset matters. Be the calm in the storm. Here's the thing. The market is unpredictable. Corrections, crashes, and volatility are inevitable. But what separates successful investors from the rest isn't their ability to avoid losses. It's their ability to manage them. Think of the greatest investors like Warren Buffett. They don't panic during downturns. Instead, they see them as opportunities to strengthen their portfolios. Risk management isn't just a strategy, it's a mindset. Final thoughts. Risk management is your parachute in the wild ride of investing. Diversify, size your positions wisely, use stop losses, hedge when necessary, and always keep cash reserves ready. The market will test you. It's not a matter of if, but when. But with the right strategy, you can navigate any storm and come out stronger. Because in the end, investing isn't about avoiding risks. It's about mastering them. And now you've got the tools to do just that.